expenses that require to pay withholding tax. A lot of time we are not aware that there are items that we got to pay withholding tax. Recent year, we start to talk about digital tax. We talk about digital tax. So digital tax is another big topic by itself. All right. So before we go into that big topic, which will be another venue for us to discuss, we would like to just touch on this on a common ground, whereby expenses that is required to pay withholding tax, a lot of people they miss out. Okay, what are the items that you will be able to require to hold withholding tax? These are just example. It's not conclusive, ladies and gentlemen, not conclusive. So we just do a quick touching on two items. One is called royalty, and another one we call special classes of income. The classes of income, it may be fees and etc. etc. Okay, so for this particular one, very quickly, we just wanted to say withholding tax will require to be on royalties. Item that is come under royalties, and royalty now includes your advertisement payment to Facebooks and advertisement that you pay online, as well as your software solution. For example, from Microsoft, the licensing fee that you pay, is actually subjected to withholding tax now. Why? Because it's actually being defined as a royalty now. Okay, and subscription, monthly subscription fee that you pay. It can be ebook, it can be entertainment, whatever that you actually pay, then it is also come under royalty. A lot of people say, hey, Agnes, I pay Netflix. Do I have to pay withholding tax? Okay, your Netflix has nothing to do with your business. I'm sure this is your personal matter. So let it be, ladies and gentlemen. Okay, we are only talking about items that we are subject to the company tax. Company tax is actually company expenses. But if you subscribe to Netflix, because in your course of doing business, you do need to actually have this particular subscription. And yes, the item is actually will now subject to withholding tax. Withholding tax is a responsibility of the subscriber to pay. It's not the responsibility of the person who charge you. Okay, it's not eBay who charge you, and eBay need to be responsible to charge you withholding tax. No. Withholding tax is a responsibility of the payer, him or herself. Okay, but good to know, transaction fee, PayPal transaction fee, all these are considered classes of income, special classes of income. It's not come under royalty definition. So we talk about what I call the onshore, offshore matters. We call it services provided outside of Malaysia. So it is therefore not subject to withholding tax. Okay. Now, so when come to this particular item, okay, a lot of time taxpayer have this thought, payment to FSP, foreign service providers, for the rights to use software, for example, will only be tax deductible when withholding tax is being paid, right? Just now we have just explained, because it comes under the jurisdiction of royalty. Okay, now, if the company suffer huge losses, can the taxpayer ignore the compliance requirement under the withholding tax as a disallowance of these expenses carry no tax impact to the loss-making company? Meaning, my company making losses lah. I don't want to do this withholding tax. It's additional money that I actually have to come out. Okay, so forget about it. Let the inland revenue add it back, right? A lot of people will actually think about that. So, ladies and gentlemen, is this thought process correct? Just now, I did actually touch on a little bit about it already. We shouldn't go into a thought process when it comes to audit in particular on and agreeing by agreeing to a tax treatment that is done by the inland revenue purely because the tax impact is insignificant to you. This is not the right approach. Okay. Now, withholding tax is even more important that you should not carry that, because unpaid withholding tax and late payment penalties remain to be debt due back to the government. It remains, right? So not just is being added back, withholding tax rule itself require you to actually have these other late payment penalties that comes in. So this is very important for us to take note. This is a common mistake that a lot of people think, never mind now, we just let it be. Don't be like that. Okay. Now, our fourth discussion item that we want to touch on is actually deemed interest income. Can a company provide an interest-free loan to directors, ladies and gentlemen? Can I provide an interest-free loan to the directors, the company? Of course you can, right? Auditor account always mention that, it's interest-free with no fixed term of repayment. The notes will always say that. Let alone and put aside all these things about money lending act, put aside all these things, purely looking at this question as it is generally is being done. Of course it can. Just need to take note that effective from the year 2014, where a company provide any loans or advances from its internal funds to its director, the company shall be deemed to derive interest from the from the directors, and then will need to be subject this into the taxable income of the company. So the company got to calculate an interest income and put it as a taxable income for it. So this comes under the section 140 capital B of the Inland Revenue, right? Now, why I specially mentioned about 140B of the Income Tax Act? Because I'd like to actually highlight this to you. This is on director, specifically mentioned 140B. Okay, now, under section 140 capital A, okay, the Inland Revenue actually has a power. What is the power that the Director General has, Inland Revenue has? It has a power to substitute prices. It has a power to disregard your company structure or your corporate structure that you are trying to come up with. It has the power to impose surcharge, of up to 5% on TP adjustment, TP relating adjustment pertaining to this. Now, for this particular discussion area, I would like to specifically mention to you on substitute price, the arm's length price method. Arm's length price method and transfer pricing document is a little bit different. Transfer pricing means, there may be a threshold relating to it, okay? But when it comes to arm's length, is, ladies and gentlemen, all taxpayer matter have to be done on an arm's length basis. Now, the DG has a power to substitute for arm's length price for transaction with associated person if DG has reason to believe that the price have charged higher or lower. Why do I wanted to highlight this particular discussion point under this interest matter, under this company having this company have this loan that is actually lended over to the director, right? And then now, what if the company not having advancement to the director, but the company loan money to a director related company? What will be the treatment? As far as 140B, the slide before is concerned, right? It only talks about director, but we have seen through the sharing from our clients as well, we understand that there are tax audit outcome before, whereby the Inland Revenue actually not only looked into the deemed interest onto the director, but actually come out with an audit finding to actually ask for another deemed interest, okay, on related party balances, which is also in the form of an advance of borrowing, which is actually interest-free. So the question that was actually pop out is, hey, deemed interest is only applicable to director. Why does deemed interest need to apply for all these companies? Can I actually appeal for it? Of course, for Inland Revenue, you always have an avenue to appeal. But what I wanted to highlight is that Director General has this particular power under 140 capital A to actually create an arm's length transactions when the money was actually loaned over to related related party, which the director having interest for. Okay. Now, question, ladies and gentlemen, practical issue now. This approach, this is only a power of the DG, meaning there may not be a standardization. There is no standardization from one case to another. If that is the case, why do I bother as a taxpayer to do that after listening to the Coffee on Zoom of Agnes, of Syarikat, right? Now, I don't have a straightforward answer for you. If you ask my personal opinion, from an entrepreneur point of view, as a company point of view, I probably will not actually do this interest myself as well, because it is not really pushed to me through the act. When I'm talking about common director company having this, I probably would not. But I must be mindful that the Director General may think otherwise and impose this substitute price power onto me. Yeah, I got to be mindful about it. I got to be mindful over if I don't do my self-calculation, what may be the reason that I give to myself in the event of tax audit. Okay, now if the money that the company is actually lending out to the common director company, okay, if that carry interest bearing by the company who lend the money, meaning there is an interest restriction, then yes, I should charge interest. But if it's a clean money, right, that is really making everybody put to thoughts, including me, right? So I don't have a straightforward answer to you. I think it was still very much case-to-case basis. We just have to know there is a power that the Internal Revenue can do a substitute prices until and unless it's imposed as a section like 140 capital B that we have highlighted just now on deemed interest of the director. The rest here, there is actually very much depending on case-to-case basis.